Welcome to the Passive Income Machine podcast, where we show you how to break free from the grind and achieve real financial freedom in 10 years or less. My name is Ryan D. Lee, and I've helped thousands turn income into cash flow, trade fake money for real assets, and take back control over their time, their wealth, and ultimately their life. Each week, you'll get strategy, tools, and mindset to build your own passive income machine. So my friends, sit back, relax, and enjoy today's episode. Hi, my friends. Welcome to episode 2 of the Passive Income Machine podcast. You are on the microphone today with me, Ryan D. Lee. And in episode 2, we're going to be talking about how to make financial freedom inevitable. Not just a dream, not just a wish, not hopefully one day when you have enough money, but how to make financial freedom literally inevitable. Now, listen, in the previous episode, we started off with the problem. I think it's important to start with the problem because ultimately, when we understand what's not working, when we can clearly identify what isn't working, it becomes so much easier to see the solution. And quite oftentimes, the solution is doing something quite a bit different, especially as it relates to money. In fact, Albert Einstein, back in the day, he had some type of theory where he said, look, if he was tasked with 1 hour to come up with a strategy to save the world, he would spend 95% of his time identifying and outlining the problem. Because once you clearly understand the problem, the solution almost manifests itself simply with the understanding of the problem. So we spent episode number 1 talking about the problem, and the reason you're likely listening to these podcasts is you are becoming aware of the problem, or you are likely already aware of the problem and are looking for tools and tactics to solve the conventional financial planning problem. There is a major catastrophe as it relates to financial planning, but yet the same tried and true wisdom of go to school, get a job, put your money in some form of a market-based account and wait for one day, that's still the path. That is the conventional wisdom, even though it's not working. It's like an unconscious commitment to things that we know consciously are not working. I don't fully understand it, even though there is psychology behind that. But today, we're not going to be talking more about the problem. I'm going to open up the doorway to the solution. And the first thing I want you to consider with the doorway to the solution is if 97% of traditional financial advice is dangerous, misleading, or outright wrong, then the antithesis to that is not doing those things better. It's doing the exact opposite. And I want you to consider this. In life, is whenever we look at outliers, people that have defied the odds, they've achieved extraordinary results in what seems like an ordinary world. Most statisticians, most people want to look at those outliers and dismiss them because it's messing up the data of the average. And this is in statistics, it's a sound behavior. It's a statistically worthwhile and sound behavior when you're trying to find the law of averages to dismiss the outliers. And so inside of the world of money, when we look at people who have defied the odds and achieved financial freedom in a short period of time, if you also want that, we don't dismiss the outliers. We ask them instead, how did you do it? And in every single example that I've found, that I've met, people who achieve extraordinary results are not doing ordinary things better than the average person. They're doing the exact opposite. Most people gamble on retirement. Smart investors, they build systems that guarantee their freedom in 10 years or less. So what if I told you? What if I told you that there is quite literally a formula that makes financial freedom inevitable? No matter where you start from, no matter your age, your income, or your experience, what if there was an actual repeatable formula, a system, if you will, that would give you predictable and consistent results? Now, this isn't theory, it's just math. And today I'm going to be breaking down the system, the framework, the outline of the system, so you can start to understand there are 3 main components in this concept of the passive income machine. Now, I've shared this with so many people. And one of my favorite things is when I watch someone take a system, they learn how to operate and use money as an investor versus a speculator, and they start to get extraordinary results of their own. They're not just relying on my story or someone else's story. Their story starts to come to fruition. I'll never forget Leah Whitman, one of the very first people that came into our world several years ago. She had done just about everything right. She had been at worked in a career for several years. She had saved up by the world standards a very healthy sum of money. But there was only one problem. she was afraid to retire. During COVID, her company was actually doing forced layoffs. And as she looked around, she realized she did not have enough accumulated, even though it was a good sum of money to retire conventionally. She was worried if she retired in her 50s, she would run out of money. And, she was also worried because of COVID and her, kind of her age in her career that she couldn't replace her income. So she was looking for solutions. And she came on one of our webinars where we talked about the passive income machine, and she had enough pain and enough desire all at the same time to listen. She sat down, she did a game plan, we reconstructed her finances, what she was making, what she had, and we reoriented it to the passive income machine instead of all of the conventional systems that it was at. And within 18 months, Leah was able to freely walk away from a, long lucrative career, making well over six figures, completely financially free, nearly a decade, if not more, before she ever thought it was even going to be possible, with more spendable income. Now, was this alchemy? Was this some magic trick? No, this was simply understanding the objective of all savings, because we all have the exact same goal. In fact, I want you to consider this, okay? If you wanted to retire in 10 years or less, if that was your objective, and you looked at your pile of money that you have right now, no matter where it is, if it's in a 401k, if it's in an IRA, if it's in a brokerage account, if it's in real estate, if it's in a bank account, if you keep it in cryptocurrency, or, maybe you still walk around with cash in a wallet or a purse, wherever it is, I want you to ask yourself, if you take all of the money that you have and you add it all up and you say, okay, cool, my number is X, I've got $200,000. The question that you have to ask yourself is how much income will that asset or those sum of assets deliver to me? How long will that income last? And does that income rise or fall with inflation? Now, I want you to consider this. You've likely, if you're new to my world, you've likely never thought about your money that way. If you have traditional financial planners, or if you're putting your money in your brokerage account, what are you actually looking at? You're looking at your rate of return. You're looking at your balance rising or falling. You're summing up your net worth, and you're using all of these metrics to try to roughly determine if you're on track or off track. But without an answer to the most crucial question, how much income do these assets deliver to me, it's virtually impossible to come up with a financial plan. So the first place that we have to start is we have to start with a definition of success. What does financial freedom actually mean? It's one thing to say it, but how do we measure it? How do we experience it? Well, financial freedom is quite simple. When your assets, whatever they are, produce enough income to cover your expenses, you by definition, my friends, are financially free. Now the second question is, how long will that income stream last? If you put your money in an account, like a 401k, for example, and you're slowly drawing money out of that higher than the account is going up, you're drawing down your account. And so the longevity, how long that account is going to last, becomes a variable that you have to consider. Now, if you've also done things like park your money in a 401k or an IRA, do you consider your ability to retire early as even possible? Because the sad part about it is the system isn't meant for you to retire early. It's not meant for you to be financially free in your 30s or your 40s or even your 50s. Your money in those accounts are locked up, right? And if you want to access it, there are penalties that you have to pay just to access your money, right? I don't know all the reasons for that, but I do know that makes it very difficult for many people who have been following the system to now retire early when they don't even have access to their money. But the first thing we have to understand, before I go off too far on a tangent on, my my lack of love and respect for tax-deferred accounts that lock up your money, is how much income do your assets generate? Once you understand how assets generate income, you start to look at the world of money completely different. It doesn't really matter what your net worth is. In fact, if you had a net worth of $500,000 or a net worth of $1 million, but a $500,000 net worth would net you 3 times more spendable income, would you really care what your net worth is? No, all we care about is how much income do my assets generate, how long does the income last, and preferably, please make it rise with inflation, because I don't know if you've been living in the same world as me over these last couple of years. There's this thing called inflation, the effects of printing a whole crap ton of money that are making it very difficult to keep up with the rising cost of living. So now that we understand the definition of financial freedom is income, it's cash flow greater than expenses, this now becomes our measuring stick to whether or not we're winning or losing. If you don't know how your assets convert into income, your first piece of homework, and I'm going to give you these answers over future podcast episodes, your first piece of homework is to figure it out. Right? If your money's in a 401k, if your money's in an IRA, if your money's in a brokerage account, if your money's in Bitcoin or real estate, all of these different asset classes are really asset classes meant to hopefully grow your money, but most of them aren't meant to actually give you a stream of income, which is the pretty ironic since the very thing we're saving for is a stream of income. So how much income will your assets deliver for you? If you don't have an answer to that, that means you're probably in a system not designed to make you financially free. Now, second thing that we have to consider to this system is when we discuss income, what is the greatest potential destroyer of your wealth, of your future income? Well, if we think about it, maybe it's markets, maybe it's, expenses, maybe it's, inflation. Inflation is definitely a major part of it. But I want you to consider the greatest destroyer of your ability to spend money in the future is and likely will be taxes. And if this is true, then again, go back to the beginning. When we begin with the end in mind, we can start to look at our actions that we're taking today with a lens of intention, right? And it's not just saving for retirement. No, we're saving for a stream of income. And what you're told to do in the conventional financial model is to defer your greatest liability, taxes, right? You take a tax deduction today, we put our money in some tax deferred account. And basically what that means is the IRS becomes your new BFF in retirement, right? Before you ever get to take any money out of your retirement account, you have to square up with the tax man, right? I don't know what taxes are going to do in the future, but I do know for dang sure I don't want to take the IRS into my future unless I have to. There are real mathematical ways that you can actually not defer your taxes, but eliminate them. And I want you to consider this. What if your objective was to have $10,000 of spendable money, $10,000 of spendable money for you to feel like you could live the life that you want, for that to be your freedom number? Well, if you were deferring your taxes and you're, between state taxes and federal taxes, when you take income out of your account, you have to pay those taxes first. In order for you to net $10,000, you'd have to take out about $14,000 a month, roughly, to give you the ability to pay your taxes, which ultimately means you'd have to have a much bigger nest egg, a much bigger sum of money, because 30% of your portfolio is not yours. You've invited the IRS to participate in your future retirement. And consider the partnership that you've gone into with the IRS. They're your BFF, by the way. Okay, but inside of this BFF relationship that you have with the IRS, you're the one doing all the work, you're the one putting in all the money, you're the one taking all the risk, and at some future point, when you decide to go to your BFF and say, hey, let's retire, they get to tell you how much of your portfolio they actually own. So rather than deferring our taxes, what if we could actually eliminate our taxes instead? Well, ultimately what this means is when we begin with the end in mind, knowing that income is the objective of all future-based savings, we now want to find ways to get us the most efficient and effective income stream as possible. And if you follow the pathway that you're going to learn over the coming episodes in the Passive Income Machine, I'm going to show you by episode 5 how to create a tax-free stream of income for the rest of your life. Let me say that one more time. How to create a 6-figure tax-free stream of income for the rest of your life. Hey, real quick, before we get back into it, I gotta tell you, if you're getting value here, you'll love the How to Retire in 10 Years Summit. I mean, seriously, everything you're hearing right now, the tactics, strategies, all the insights, they all tie back to this one incredible event. We're laying out the exact blueprint for financial freedom in 2025, and pre-registration is open right now. If you jump in early, you'll get special bonuses that won't last forever. So hit that link in the description or go to retireintenyears.com and secure your spot. Now, let's get back to the show. Now, when you do that, here's a couple of things that actually happen. You don't actually need as much money saved up. Your net worth becomes, again, less relevant because you get to spend the money that you've accumulated. You get to spend the money that you've built up. That's number one. Number two is you're not worried about some of the variables inside of a financial plan. I want you to think about how traditional financial planning works, okay? If you've ever gone through this, you've likely experienced some version of this. But if you're going to follow the conventional system, at some point, you're going to sit down in front of a person or a computer program or a combination of the two. And that person or computer program is going to start to ask you a bunch of questions. They're going to ask you, what rate of return do you expect to earn in the 5, 10, 15 years leading up to your retirement. You're going to make a guess. Then they're going to ask you, what rate of return do you expect to earn in the 5, 10, 15, 20 years after retirement? You're going to look up some of the historical averages and try to make an educated guess, but nonetheless, you're going to come up with a guess. The next thing that the person is going to ask you is, what do you think inflation is going to be now and into the future? You're going to come up with a guess. You're going to say, hey, it's been 3% on average, at least that's what we're told. And so let's just hope that it stays 3% on average in the future. Maybe it goes down, I don't know. But like, you're going to make another guess. Then you're going to make yet again another guess on, are you going to need medical expenses in retirement? What do you think, where do you think you're going to want to live, and what are the lifestyle expenses of that area? All of these different guesses you're going to make, and you're going to put all of these guesses into this system. And at the end of the day, it's going to take all of these guesses and it's going to give you an outcome. It's going to tell you, hey, you need to save this much money. You need to have this much money in net worth. And if you do it, here's the income you can generate. But I want you to consider what we just did. We just sat down and we just guessed about one of the most important decisions that we make with our life. Every single day, we're trading our time for dollars, my friends. Every single day, we're waking up and we're stressing about, can we pay the bills? Do we have enough money to not just save for the future, but to pay for the present? Every single day, we're waking up stressing about, I got to go to work. I got to run in my business. I got to do the things. I got to make enough money. This is what people trade their lives for, and they put a little bit of money aside to buy their lives back. But their entire plan is based on a series of guesses. Now, Wall Street doesn't want you to know that. They're going to disguise the word guesses with assumptions, and somehow we feel better when it's an assumption, and we take the average assumptions that everyone assumes. But at the end of the day, my friends, I think you probably know what an assumption is. It's an educated guess at best. And I won't even say what it is at worst, okay? So the first thing we have to understand is, look, we have to understand the definition of success. It's cash flow greater than expenses. We now have a scoreboard that we can use to track our success. And the second thing I want you to consider is we have to stop guessing and we have to start investing. We have to stop guessing and we have to start investing. Investing is completely different than guessing. It's using a principle-based framework, a framework that gives you predictable and consistent outcomes. These predictable and consistent outcomes can allow you to build a pathway with small variances and margins for error. Now, here's how the passive income machine works. Step number one is, at some level, you're going to have to commit to taking your money off of Wall Street. The company behind the passive income machine is a company called Wealth Outside of Wall Street. And the reasoning behind all of this is, look, inside of Wall Street, you're playing a game governed by other people. You're playing a game where they win at your expense. You're playing a game where financial advisors, companies, taxes, all of those things, they get their cut before you get what's left over. The real wealth, people who have become the outliers, the ones who have defied the law of averages, they're not doing average things better. They're doing the exact opposite. And so once you've committed to taking your money off of Wall Street, or at least a portion of it, to start to get some experience, you start to learn what it actually means to become an investor. On Wall Street, you're told you're an investor, but you're not. After all of those guesses, here's what you really are. You're just a speculator. A speculator is someone who parts with their capital, the resource that they've traded all of their time for. They part with their capital, and they just kind of cross their fingers. They hope that one day all of these guesses are going to work out for them. That's a speculator. Now, we could just as easily say a gambler, and you could take the money that you saved and go to Vegas, and you might have just as good or better odds there as you do on Wall Street. But when you're ready to become an investor, you take your money off of Wall Street, you raise your financial intelligence, and we quite literally start using money as a tool. Now, there are three components of this investment strategy that go deep in depth, but they work flawlessly together as a system. So there are three gears inside of the passive income machine: gear number 1, gear number 2, and gear number 3. Gear number 1 is the gear of the input into your financial system. Gear number 3 is the growth vehicle of your financial system. And gear number 2 is one of the greatest secrets of all. But let's start off with gear number 1. The very first gear associated with your ability to become financially free is you. We call the people inside of our world empire builders. These are people who have committed to getting wealthier by getting smarter. I want you to consider this. You're not taught about money in school. You're likely not taught about money from your parents, from your friends, from anyone around you. Is it any wonder that most people are financially stuck? We're just repeating the same behaviors as other people who are also stuck. But I don't know if there's nefarious reasons for this, but at the end of the day, most people have a very low financial intelligence. And so if money really is a tool, it's up to your intelligence, the component, the portion of your brain that you use to solve money problems to ultimately create the outcomes that you want. And so there are a few different financial IQs. We're not going to talk about them in this podcast, but the first gear is your ability to truly rise up, to become committed, and to realize that you have to be the solution to your financial problem. That's step number one, is realizing that you, my friends, have to raise your financial intelligence, have to reclaim control over your resources, your money, and have to use that money in a very intentional way. Now, one of the very first books that I read on my pathway and my commitment to become financially free myself was a book called The Richest Man in Babylon. And there was a really interesting saying inside of this book where the author said, the secret to wealth is quite literally 10% of all I make is mine to keep. Let me repeat that. 10% of all I make is mine to keep. That sounds like a pretty simple saying, but today, the average savings rate for most Americans today is between 2 to 5%, 5% on the high end. We've gone through periods of time in the recent history where the savings rate has been at or near zero. But back early on, 1970s, 1960s, even up into the 1980s, Americans saved on routinely 10 to 15, even 20% of their income. That was just a principle, a way of life that was built into Americans. Now, I'm not going to go into all of the reasons why the savings rate is so low today, but I'm going to invite you to consider this. When you put money aside for the future, who are you actually saving for? Think about this for a moment. The present version of you is sacrificing time, sacrificing energy, sacrificing effort. In exchange for those sacrifices, you have dollars, you have money. That money could be used to spend today to improve the quality of your life today, but you're taking 10%, or that's the objective at least, 10% of what you make, and you're setting aside for someone in the future. Who is that person? Well, that person is you. That person is the future version of you. That person, I would invite you to start to get comfortable getting to know that future version of you. Think about the version of you 10 years out. If you're 20, think about the 30-year-old you. If you're 30, think about the 40-year-old. If you're 45 like I am, think about the 55-year-old. Who is that person? What does that person want? And when you get really comfortable and clear with who that person is and what they want, it gives you so much more meaning and context to the idea that financial freedom is quite simply a function of becoming financially free by adopting simple habits and attitudes to set aside a portion of all you make is yours to keep for the future. We'll go into a whole deep dive podcast on this concept of how to become a saver and how to align your dollars with your values, your goals, and necessities. But for the sake of this discussion, the very first gear is you. It's you having a commitment to become financially free, you committing to raising your financial intelligence so you can use money as a tool, you committing to saving 10% of your income at the very least in order to do it. Now, if you can't do that yet, baby step your way to it. Start making more money, start getting very intentional where your money's actually going, and start to get to know the future version of you. That person wants so badly to be free, and only you, the present version of you, can make it happen. So that's gear number one. It's your inputs into the system. Now, many of you listening to this podcast have likely been or are currently good income earners. Most of the people that come into our world, they've somewhat mastered the game of making money. They have good professions, they run successful businesses. They're people who have understood that they could use these talents that they have. They understand that they can drive their value, that they can solve problems, and they can exchange their services, their products, their solutions for dollars in the marketplace. But the second step of this equation, as soon as someone has money that they've made, what are we told to do with that from all of the financial pundits? Well, we're told to hand it off to some, I'm in a quotation mark here, okay, to some investment vehicle. We're going to put it in the market. We're going to put it in a 401k. We're going to give it to a financial advisor. We're going to buy a piece of real estate. All of those things, I'm not saying they're good or bad, but we're skipping the most fundamental step in the pursuit of becoming financially free. In the long run, real wealth, it's not how much money you make. You can finish the sentence for me, I'm sure. Real wealth is how much money you keep. The concept, the gear number 2, is one of the most dynamic financial tools that, when done right and built right, will allow you to store your capital, grow your capital, eliminate taxes from your future, and have the ability to leverage your capital while still staying on track to compound your money over the long run. It's an overfunded, high cash value life insurance policy. It's called the vault. Many people refer to the system of using these type of policies as infinite banking or private banking or cash flow banking, any of those different things. And while what I'm going to share with you is in the Passive Income Machine has an element of that general concept with it, it's so much more than that. But step number 2, the thing I want you to consider is wealth is a function of what you keep. It's not what you make. Making money and keeping money are two radically different things. And I truly believe that if you as a producer, you as an empire builder, can get really good at investing in your mindsets, your skill sets, and your ability to create value in the marketplace and make money, if you compare that skill with keeping the money that you make and never, ever, ever losing it, then my friends, that's 80% of the game of becoming financially free. I've talked to so many people over the course of their lifetime who've made a lot of money and they've lost a lot of money. The second they have it, they spend it. If they don't spend it, they invest it, quotation marks again, in things that they don't have any control over. There's no collateral behind it, so they make money and they lose it there. And they just ride this up and down roller coaster over and over and over again. But I want you to imagine a world where you systematically got wealthier every single month, every single year, decade after decade. What if you could raise the watermark of wealth and of money kept every single year, and you go from a couple $1,000s that you've kept into a couple $100,000 that you've kept into a couple $1 million that you've ultimately kept? This is the function and the effect of keeping money and allowing it to compound uninterrupted by inflation, uninterrupted by taxes, uninterrupted by market volatility, uninterrupted by lawsuits or anything like that. These accounts are quite literally private contracts that are set up in a very, very unique way. Now, we're not going to spend very much time on this podcast episode talking about the vault. I'll do an entire couple of deep dives on the vault so you understand it, but just know this is not a fancy tool that's hot in this year and not tomorrow. The wealthy individuals are using this, politicians are using this, banks are using this. The people who understand how to be the outliers and operate like outliers, they understand making money and keeping money are two radically different things, and most people keep hundreds of thousands, if not millions of dollars inside of these accounts. That's gear number 2. Now, remember the end in mind. What is the purpose of all long-term savings? Well, it's to generate a future stream of income. So in addition to having a place to grow and compound our wealth, as you'll learn about it in podcast number 5, the vault, the overfunded life insurance policy, is the source of your tax-free income. Okay, now here's where the vault gets kind of interesting, is when we combine the vault with gear number 3. Gear number 3 is one of the greatest wealth creators of all. In fact, 90% of anyone who is self-made a millionaire has one asset class in common, and it's real estate. Now, we're going to spend a lot of time so you understand the type of real estate that fits the passive income machine. But real estate, nonetheless, allows us to grow our money more effectively than nearly anything else. And one of the reasons for that, I want you to consider real estate. It has multiple profit centers built within one single asset. You have multiple ways that when you invest in real estate that you're winning inside of that investment. Your property is appreciating. It's going up in value. If you've rented that property out, your tenants are paying down your mortgage, forcing equity into the property. So you've got appreciation and you've got amortization. You're getting massive tax benefits. The IRS wrote the tax code to incentivize real estate investors. You have the ability to use leverage, which means you can buy an asset, control an asset, have all the benefits of the asset, but the bank will give you the majority of the money to buy it. And last but not least, it's going to give you a stream of also, when done right, tax-free income. This is one of the greatest phenomenons of all, that you can actually put your money in an investment where it's making money in multiple different ways, and one way isn't correlated to the other. Well, ultimately what this means is if your real estate went down in value, that wouldn't prohibit you from getting a rent check every single month, which means your returns, because there are different pillars, because you're making returns that aren't correlated to each other, you actually have the ability to earn a higher return with less risk when you invest in an asset that has multiple ways to make money. Now, the biggest thing I want you to consider, the biggest advantage, the biggest resource and tool and mindset that you're going to need to achieve financial freedom in 10 years or less is one simple yet profound concept. It's leverage. Now, most people, when they hear the word leverage, if they've been listening to conventional financial advice, they get scared. They get nervous. They're like, oh my gosh, Dave Ramsey's going to come to my house and he's going to yell at me. Now, most people, to their credit, they use leverage debt, meaning they use debt to buy, crap that, isn't an asset, that takes money out of their pocket, and they're basically trading their future to pay for their consumption today. I'm not encouraging you to go into consumer debt. I am going to encourage you to consider the possibility that the entire economy that we live in, including our dollars, is based on a concept of debt. It's based on leverage. Leverage is the key to going from it's going to take me 40 or 50 years with my fingers crossed to hopefully have enough to retire, to being able to retire in 10 years or less. Every single individual, without question, who's achieved maximum extraordinary results in a short period of time, they all have one thing in common. They've all done it in their own unique way, but they all have one thing in common. They understand, whether it's consciously or unconsciously, and they've used leverage more successfully than average individuals. So leverage is the component. And when you put gear number one, you saving 10% of all you make at least into the vault, gear number two, leveraging the vault via a private line of credit to buy real estate, where you get the ability to leverage a bank as well, what the passive income machine gives you the ability to do is turn $1 that you trade your time, effort, and energy for into 5. Do you see why it might actually be possible with a system based on real economic principles, where if you could turn $1 into 5, could you not also 5x your results and go 5 times faster? Could you not take what takes most people 40 or 50 years and do it in 10 years or less if every dollar that you invested could turn into 5? Now, I'm going to spend more time on this concept of leverage, but I want you to understand the passive income machine as a system. The passive income machine is really 3 gears operating together. Gear number one, you're out there trading time, effort, and energy, making money. You've made a commitment to take control over your money, to raise your financial IQ, and to keep a minimum of 10% of all you make. All of that savings, not some, all of that savings goes directly to a vault, where you now have the economic certainty and a contractual guarantee that you'll never lose it. Your money will compound, it will grow, it will eliminate taxes, you don't have to worry about markets, and in addition to all of that, you can leverage all of the money you've put in as a private line of credit. Now, with leverage comes the requirement to have a financial intelligence, but we're going to leverage that capital that we've put into our vault. Now our money's compounding in 2 places at once. It's growing and compounding. We get an open line of credit with the insurance company standing behind our contract. So we leverage the value of our vault, and we go buy a simple single-family home. Simple single-family home. There's a lot of data, a lot of reasons that that's the asset that we're buying, not a big apartment complex like Grant Cardone. We're buying a simple single-family home, where now, because of bank leverage, every dollar I put into the home is allowing me to access 4 more dollars of leverage. So ultimately what this means, $1 turns into 5 in the passive income machine. And as we start to generate a profit in our real estate, we pay back the vault line of credits, we continue to put money into our ecosystem from our active efforts, and the vault becomes the centerpiece. It's receiving money from you, it's receiving credit and payback from your assets, the real estate, and now we're starting to turn these gears together to create momentum inside of your financial system. Every time you turn your system, it will move faster and faster and faster until ultimately you have the velocity of money on your side. My friends, financial freedom isn't a wish. It's not a hopeful thing that's going to happen one day. It's a decision. It's a decision. And you have to make that decision at some point in your life, because if you don't, you'll never be free. Even if you have unrealistically enough money in a 401k, you'll always be worried about what if. What if the market goes down? What if taxes go up? What if inflation wrecks me? Whereas in the passive income machine, we'll go deeper into this concept. All of those economic forces are working for you. They're working with you rather than against you in the passive income machine. But for the sake of this episode, you now know the scorecard, the metric for success. Cash flow is what we're aiming for. Your scoreboard is when your cash flow exceeds your expenses, you, my friends, are financially free. Net worth worth irrelevant. You now have a framework for the system. Make money, keep money, multiply money. And in the upcoming episodes, I'm going to share with you how to turn that into tax-free income, how to really understand the vault and real estate, and how to generate 6 figures or more of tax-free income for the rest of your life. My friends, thank you for joining me on podcast episode number 2. If you haven't done it yet, give me a like, give me a rating, give me a review, and share this with a friend, because here's the reality, my friends. Friends don't let friends retire broke. What good is financial freedom if you're all by yourself? Give this to a friend and become free together. All right, my friends, thanks so much for hanging out today. I really appreciate you tuning in. But before you go, if we talked about something today that made you want to take action, you need to get yourself registered for the How to Retire in 10 Years Summit. It's the financial game changer that you've been looking for, teaching you exactly how to create passive income and financial freedom in 2025. Jump on it early because we've got a special bonus waiting for you. All the details are in the link below, or head on over to retireintenyears.com. So get registered, and I'll see you at the summit.